Okay, welcome guys to today's teaching. This is Melody FS Academy, and if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified whenever we upload our weekly content. Okay, so this is the episode 5 on the smart money concepts trading model. Okay, and this is going to be on applying the advanced model to a trade setup, and we're actually going to look at the dollar index. Okay, so what this teachings, this video is going to be all about is I'm going to give us a little insight on how we on the application of the smart money concepts trading model, okay, and applying it to a trade setup. Okay, so I'm going to give us a little insight on how we used to trade before, or how I trade ICT smart money concepts before the 2022 mentorship. Okay, so this is how a lot of a lot of smart money traders, SMC traders, this is how they place they do their technical analysis on the rest. Okay, so I'm just going to show us the application of the model. I'm going to give us a little bit insight of the application of the model. Okay, so let's go down to the business. Okay, so this is obviously the dollar index. Okay, so this is the dollar index, and I don't really trade this much, but I spotted a good setup and I decided to take it, and so I'm sharing with us the idea that surrounded the trade setups. Okay, so now obviously, as we can see, the dollar is bullish, which is a risk off scenario like we have talked about earlier. Okay, so now we have a bullish dollar, and of course the right line of action will be to look for buy setups, right? So now we have this consolidation right here. So this is a minor consolidation, guys. So this is a consolidation. Remember, we talked about price starting, like the delivering of the algorithm delivering price is always going to start from some sort of consolidation, right? So we have price consolidating right here, price consolidated right here. Okay, we had a little false breakout, okay, that took out this short-term low right here. Okay, running on sell side liquidity and expansion. Okay, so now we had this move. Before 2022 mentorship on ICT, what we normally do is to have a certain point of interest, okay, on the higher time frame. In other words, you look at price action and you look at certain specific point of interest that you expect price to reach, and once price gets to that specific level, that is where you anticipate your entry. Okay, so now when I took this, I wasn't really, I took this trade not really looking at the 8:30, the time of day and all that. Okay, I took this trade on just points of interest only. Okay, so now obviously going down, obviously my point of interest is on this setup that gave me that actually warranted the setup I took, was that we had this minor consolidation right here. Okay, then we had the first breakout that took out the liquidity resting below the consolidation, right? Because obviously the main reasons for consolidations are to build up orders on both sides of the consolidation, right? So we have buy stops resting above the consolidation, and we had sell stops resting below the consolidation. Okay, so when we add this first breakout, there were traders that were actually tipped long right here. Okay, so there were traders that were actually tipped long, and they were actually eventually long. Okay, and the next day, as you can see, it traded lower first. Okay, traded lower first, it expanded lower, and it started before it expanded down before, or expanding upwards. Okay, and it came to respect the resistance a bit, and you can see it bounced off. Okay, creating a kind of idea that this is a strong resistance level. Okay, and probably the retail traders that went short right here, okay, their sell stops is probably going to be their buy stops, sorry, which is their stop loss, going to be resting above the consolidation, right? And we are going to have some traders that are going to be long here, as you know, having their buy stops, and they are going to sell because this is pretty much convincing look like a strong resistance level, right? So now we had this expansion, okay, we have consolidation, we have reversal, which is in form of a fake breakout, okay, and we had this expansion move upwards, okay. Then now price, as we know, is always going to move from expansion to retracement, right? So we have this expansion and price started retracing, okay. We went into the retracement phase, okay. So my point of interest was on this last set of candles, okay, the last down close candle before the expansion move, which is probably the order block, okay. So before 2022 mentorship, my order block would have been the last down candle prior to this up move, which would have been this, okay. So but the 2022 mentorship, Michael himself made sure that these sets of last down candle before the up move can be viewed as a bearish, as a bullish order block in this example, okay. In this case we have a bullish order block right here. So my point of interest was that, although I didn't, you know, I was not aware when I wasn't much really interested in these days, okay. I actually traded off this day, okay. So this is where I got interested in it, okay. So I looked at the price action, and we are currently trading at a point of interest at a level that I will be actually be interested in this price action, okay. So I saw price trading at this specific level, and I was like, okay, so let's look at it if we can get a buy setup, okay. So obviously that was what I did. Now we had this move right here, okay. We had this set of down candles, right, and we have expansion phase, and the next phase obviously is the retracement phase, okay. And we started retracing, and we already, price was already trading at a specific point of interest. So specific point of interest are like the levels that we anticipate price to reach for, and react off such levels, okay. So this daily OB would be a point of interest for me, okay. So this was my point of interest, okay, coupled with the fact that looking at this range from this swing low, right, to this swing high when we started retracement, okay, when price started retracing lower, this is my range, right. So looking at this range below the midpoint is the order block, and at the same time we have some relatively equal lows right here, okay. We have some relatively equal lows. We had this low, and as you can see we had price trading, trade price went below this old low to grab liquidity, okay. We had price running some level of sell side liquidity out, okay. So we had price taking sell side liquidity, and at the same time, even before it started expanding higher, it also went below this old low, okay, to grab liquidity, of course, okay. So now when price traded into this bullish order block, this was okay. I saw this and I was like, oh, okay, let's go down to the lower time frame and look for specific for some for some run on buy side liquidity, or sorry, on sell side liquidity, to see if we can get a long entry, okay. So now obviously, if when before the 2022 mentorship, this would have been how this is how I trade my setups, okay. So once I have identified my point of interest on the higher time frame, okay, probably that would be my point of interest, would be some form of maybe it could be in the form of, it's actually the PDRs, okay. The point of interest we are looking at on the higher time frame are just the PDRs, okay, the premium to discount arrays, which are the liquidity void, the breaker block, the bullish order block, the mitigation block, the rejection block, old lows and old highs, stuff like that, okay. And I made mention earlier that they are arranged in a specific order, okay. We are actually going to get to that when we come to premium and discounts on matrix, okay. When we get to that particular topic, we're going to take an in-depth look at it, okay. So now I was looking at the retracement, okay. You remember when we are in the retracement stage, our point of talked about our point of interest when we are in the retracement phase, okay. Our point of interest will be to look for liquidity voids fair value gaps and probably other blocks. Okay, so in this case you can see we had no much of, although we had this fair value gap, but it was in the premium sector. Okay, so this is not a high probability fair value gap. Okay, so the fair value gaps that are going to be highly probable, that are going to be of high probability is probably the one resting below the 50% midpoint, which is in the discount side of this range. Okay, so now we had no fair value gap, but obviously we had the other block right here. Okay, so this was what got my attention in. So now my model of getting in will be to wait for price to get into to trade into my point of interest. Okay, once price gets down there, we go to the lower time frame and look for some some shift in market structure, and obviously for price to to provide evidence of wanting to go higher. Okay, so now this is the intraday chart, right? This is the 15-minute chart, and this is my point of interest. Obviously you can see price trades into the point of interest right here. Okay, so now looking at this, you can see price was kept on trading lower and started consolidating. Okay, started consolidating. Remember the algorithm, right? The algorithm states that whenever there's going to be a major move, okay, for a major move to unfold, before a major move unfolds, there's going to be some level of consolidation. Price always, the algorithm is going to start from some level of consolidation, right? So we have price trading into our point of interest. So this is where we actually got interested in looking for setups, right? So we are going to be watching out for shifts in market structure. Okay, obviously we are still bearish, right? So you can see price trading below, and this is that liquidity grab right here. Okay, so price trades below the previous day's low to grab liquidity, and obviously traded higher and started moving sideways. Okay, what price was actually doing right here is accumulating more orders, right? Price is actually accumulating more orders right here, and you can see price giving a false breakout, grabs liquidity one more time. Okay, this is a run on sell side liquidity one more time, then traded away. This is an expansion, right? So this is an expansion away from the midpoint of the consolidation, right? So we have this move away, and as you can see price trades back into this move and below into the fair value gap right here. Okay, at the same time it trades into this other block. Okay, so we have these down close candles, and right here you can see price trading into it. Okay, so going down, this was on Tuesday. Okay, so I didn't look at this happened on my behalf, so I traded this on Wednesday. Okay, so we're actually going to look at the Wednesday of it. Okay, so but let's say I probably saw this on a Tuesday, this would have been how I would have traded it. Okay, so this was price dropping to my point of interest on a Tuesday, right? So this is price dropping to my point of interest on a Tuesday, and we have our shift in market structure right here, and this is our retracement. Okay, so on the Tuesday, this happened on the Tuesday, and you can see this is a midnight. I'm just putting this to separate the Wednesday from the Tuesdays. Okay, so this could be the possible low of the week, and of course this could be the possible low of the week, and it might actually trade lower than it might actually not come back to this particular level again. Okay, so but actually price is in a high premium level right now in the DSY. Okay, price is actually trading at a very high premium level in the DSY. Sorry, on the monthly time frame, the DSY, which is the dollar index, is probably is trading right now at a premium price level. Okay, so we are currently trading above an old high right now, so we might see some major move, some major form of because price is set to reach for move from some level of discount to premium. Okay, so when price moves into some level of premium, we should anticipate it to reach back into some level of discount. Okay, so that is just how it is. Okay, so now going down further, as you can see, we had this shift in market structure, and probably as you can see price came back down. So this is fair valuation. Okay, the process of price trading back into an already existing trading range is known as fair valuation. Okay, so as you can see price reacted off the midpoint. Okay, so price was bought at an equilibrium. Okay, it was bought at equilibrium, which is, in other words, it was not too cheap, not too expensive. exactly at the midpoint, okay, and at the same time traded into this other block. Okay, so this would have been my point of interest to buy this market upwards at at the 15-minute time frame. Okay, so we should expect some institutional sponsorship right here in price. Okay, so we are going to actually cover that in our next video, institutional sponsorship. Okay, that's going to come up on the next episode. Okay, so now our interest is likely on the Wednesday price action, right? So now we have, so this will be the 15-minute OB or point of interest from the previous day. Okay, so now we have on Wednesday's opening price right here. Okay, so now we have this expansion move, right? We have this expansion move, we have price as we know it, reacting off our daily OB. Okay, as we saw earlier. Okay, we have seen earlier, price is reacting off an OB right here. Okay, previous days other block. So we have this move. Okay, we have our expansion, right? We have our expansion to the upside. Okay, and price started retracement. Okay, price went into the retracement phase. So this was where I actually came across it. Okay, this was where I pulled up this chart. I was like, okay, let me look at the dollar index as a benchmark, and I actually saw that it had a very nice price action. Okay, so that was why I got interested in it. Now looking at the range, we have this low to this high. Okay, remember, as an institutional trader, we are much more interested in the bodies of the week. Okay, the bodies of the candle, sorry, the wicks are more like retail, how am I going to put it, they are more like retail concepts. Okay, institutional large money traders are more interested in the bodies of the candles. Okay, so now looking at this range from this high to this low, and we saw this retracement. Okay, so I got my first entry right here. As you can see, price trades into the 15-minute fair value gap. Okay, so the right words or the right phrase used for these particular levels that we anticipate price to react off from our point of interest. Okay, so these are the institutional terminologies we use for it. Okay, so in other words, this would be my 15-minute OB will be my point of interest. Okay, on the 15-minute time frame. Okay, and this will actually be my point of interest on the 15-minute time frame as well. Okay, sorry, going up. Okay, sorry. Now these are my point of interest, right? So the 15-minute OB and the fair value gap. So I have two points of interest. Okay, so there are going to be times you're going to have multiple points of interest. Okay, so now I have two, as you can see, we have 2 points of interest below the midpoint in the discount sector. Okay, so now notice there was no time of day like the London Q zone, the New York Q zone. There was nothing like that in this price action, in this chart. Okay, as you can see, I had nothing markup for my Q zone either way. Okay, so I was just having price action, and I was just having my point of interest, right? So now when price traded below this, I got my first entry right here. Okay, so let's go down to the lower time frame and look at how, okay, and see how it goes. So now this is that 15-minute fair value gap. Okay, which is this, right? So this is my point of interest. I'm expecting price to rally or to react off this particular fair value gap, right? So going down to the lower time frame, the 1 minute time frame, you can see price trading into my points of interest, right? So I was waiting for some shift in structure. Okay, so prior to that, we can take a look at how price consolidated. Okay, so now we see the importance of consolidation, right? So now we know that when price is consolidating, it's actually building up orders on both sides of the consolidation. So probably there are going to be sell stops resting below here and buy stop resting above the consolidation, right? So we have this expansion, although it was not really, it was sloppy and sketchy some in a way, but this is also an expansion. Okay, and we have our shift in market structure right there, and price trade down. Okay, we have price trading back, retraced back down. So what is this? This is actually an OB, but I didn't get my entry right there. Okay, I didn't get an entry, I didn't took an entry right here. Okay, so I actually had my entry when we So I was not interested on this other block. Okay, I wanted to see a kind of a huge displacement. Okay, so although this looks sketchy, and that was why I was not interested in it, because the movement was sketchy. I wanted to see a real displacement move. Okay, so now we got this, we had this minor retracement, probably a consolidation, then we had this displacement. Okay, so this was what I was interested in. Okay, so I had this expansion, a break of structure to the upside. Okay, so when we started retracing, I had this fair value gap, and at the same time we had this other block. Okay, so these are the last set of down candles before this whole move. Okay, so I got my entry right there. Okay, I got my entry right there, and my stop loss was below here. Okay, so my stop loss was at this third candles. Okay, because this is uh a huge pips. Okay, this is kind of huge, so I actually had to put my stop loss below the low of these third candles, because we actually had two fair value gap, right? Remember we talked about giving room for price, okay, to breathe if we have two fair value gaps, right? So we had these two fair value gap, and at the same time we have this OB. Okay, so now this was where I got my first entry, and I was actually looking at aiming at this old high. Yeah, I was aiming at this old high. Okay, so now price moved a bit in my direction, and as you can see, took a turn around, and I got a break even trade. Okay, I got a break even trade after that was after taking out some partials. We have this fair value gap right here. Okay, so and if taking a look at this range, from this range high to this range low, that's probably above the midpoint. Okay, the midpoint is somewhere around here, and I took some partials out before I got stopped out at a break even. Okay, so I got stopped at a break even. So what was my next line of action? Okay, remember we had 2 points of interest, right? I had 2 points of interest. I had this fair value gap, and I had this OB. Okay, so I was like, okay, let's watch and see what price is going to do. So price started retracing. Okay, we were in the retracement phase. We are still inside of this range. Okay, remember we are still in this range from this low to this high, and price came back down and traded to my second point of entry interest, right, which is the 15-minute OB. Now once price got here, okay, when price reached this particular OB, and went down to my lower time frame and look for the same thing. Okay, I look for the same thing which I which was what I looked for earlier on this. Okay, which is shift in market structure. Okay, so I looked for the same I look for the same price action. I look for the same fractal. Okay, price, because price is fractal as we know, and I was looking for a shift in market structure. Okay, so this is my 15-minute OB, which is my point of interest, and as you can see, price dropped into it. Okay, consolidated a bit and expanded. Okay, expanded. So this is huge displacement. Okay, so this is an evidence of institutional sponsorship. Okay, and we are going to talk about that in our next episode, institutional sponsorship and why they are very, very important. Okay, so now this is an evidence of institutional sponsorship. Okay, so now we had the break of structure. We have a shift in market structure down here, and we had a break of structure, and probably price consolidated and expanded higher. Okay, price consolidated a bit and expanded higher. So now I was looking at the range. I was like, okay, so this is a huge displacement, guys. This is a huge displacement, and looking at the range from here, from this low to this high, what is resting below this equal lows? Okay, this is a consolidation, right? Remember, others were built up around this consolidation. Okay, so we had those that were lucky enough to go long right here are going to probably trade their stop loss below here, and they are going to be those that are going to be seeing this as a kind of support level, that and they are going to be looking at it at a future time, that if price breaks this, they are going to look for sell entry. They are going to place their sell stops resting below here. So as you can see, price broke it. Okay, retested it on this particular candle, this green candle right here. Price broke. This is classical support storm resistance. Okay, so price retested it and started trading lower. Okay, started trading downwards into this. So we had this fair value gap, and we have this, and we have this. Okay, at the same time we have this whole set of down close candles. So this was my order block. Okay, this was my order block. In this, well, remember we're on the 1 minute time frame. Okay, if we view this from a higher time frame, it's not gonna it's gonna be probably a single candle. Okay, it might be probably a single candle on the 15-minute time frame. Okay, this is actually a single or two candles on the from the 15-minute time frame. Okay, so when price traded into this and into this fair value gap, I got my second entry right there. Okay, and my stop loss, of course, I have two. We have multiple fair value gaps. Okay, we have multiple fair value gaps, so my stop loss was on the low of this. Okay, so I allowed, if price is probably going to feed this fair value gap, my stops should be probably, give room for it. So my stop was probably below the low of this candle, and you can see that is a huge risk. Okay, that's a huge risk. Okay, now there's a certain order that the PDR matrix are arranged and how price seek for them. Okay, we are actually going to talk about that when we get to the concepts of PDRs, which is a premium to discount matrix. Okay, we are going to talk about that, and at the same time, like I said earlier, this is a consolidation, and we have liquidity resting below this low. Okay, so price came back to seek those liquidities and trade into this. This is a breaker block. Okay, so this is a breaker block. I forgot, this is a breaker block, and a breaker block is simply the last up candle before a run on liquidity. Okay, so this was the last up close candle before price took out the buy side liquidity, sorry, the sell side liquidity resting below this equal lows, and at the same time this low. Okay, so this is a breaker block. Okay, so now price went down and broke structure to the upside, consolidated, expanded a bit, came back, took out the liquidity resting below here. So I got my entry right there. Okay, I got my entry right there. So as you can see, probably I fell for this. Okay, I read price wrong, price action wrong, and bought at premium. Okay, so this was what I was actually trying to tell us. If we have a let's say an order block that is resting, or a fair value gap that is resting in the premium sector, okay, and you went ahead and bought that premium and bought that particular fair value gap or order block, the probability of it resulting to loss is huge. Okay, it's high. Okay, so in this case I saw this as a potential order block because I was like, this is a huge move, right? This is a huge displacement, and price might likely not come back to fill it at the moment. Okay, and I saw this breaker block, I saw price reacting off the breaker block. Okay, and consolidated and expanded. Okay, so what I failed to realize was that we were at a premium side. Okay, so I actually got in right there on this OB for a second entry, and I got out at a break-even trade. Okay, it was a break-even trade, and then price retraced into below the equilibrium level. Okay, so this was where I actually I realized my mistake I made, because this is obviously a consolidation, and liquidity is going to be resting below that consolidation, right? So now what resulted to this loss is that I read price action wrong and bought at a premium side. Okay, I bought at a premium market. Okay, so I bought high, was like buying at a high price. Okay, so I didn't wait for price to come into some level of discount. Okay, which is something that a mistake that most traders make. Okay, sometimes we are actually going to read price wrong, and we are going to there are times that price is going to look like it's slow, and we just want to get in real quick and all those kind of things. Okay, so these are sometimes this is what is going to come out of it. Okay, this is what is going to come out of such actions. Okay, so it's best you don't have an entry than to have a loss. Okay, it's best you don't have an entry than to have a loss. Okay, than to have a losing trade. Okay, so that was what happened, and obviously you can see when I had the break of structure, when I have price straight into the discount side. Okay, so this is the fair value had price trade below the 50% midpoint, this was the fair value gap I bought at, okay, and my stop loss was below these candles. Okay, so as you can see, I was still aiming for that old high right here. Okay, so I got in right there, and as you can see, my fair value, my stop loss was below this candle's low. Okay, so that was where my stop loss was, and it's a total risk reward ratio of 4 to 1. Okay, so that's 4 to 1 risk to reward ratio. Okay, so I was looking at a probable a second entry. Okay, I was looking at a second entry, and as you can see, we had this break of structure, right? We have this break of structure. This is the 15-minute time frame. Okay, and we had this break of structure, and we had this OB. Okay, this is an order block. Okay, so the down candles in, when we have a institutional order flow that is bullish, okay, we should expect the up close candles to hold price. Okay, we should expect the the down close candles to hold price. Okay, price should not be seen trading below the down close candles. Okay, so in this case, when we had this as a bullish order flow, okay, you can see each time price trades into a down close candle, it reacts off. Okay, each time price trades into a down close candle, it reacts off it. Okay, so in a bullish market order flow, price should not be, price, one of the ways to know the institutional sponsorship, to know that smart money, institutional traders, large fund traders are currently backing up price in the form of, are currently sponsoring the market. Okay, which is referred to as institutional sponsorship. Okay, how one of the ways to know that smart money or large fund institutional traders are currently sponsoring the market at that moment of trading, okay, is that on a bullish order flow, okay, on a bullish order flow, on a bullish market order flow, the down candles should be seen holding price. Okay, in this case, as you can see, when we had this break of structure upwards, you can see the down candle head price right here. Okay, so price should not be seen trading below down close candles. Okay, in the bullish trend, of course, then that would be a vice versa for a down trade. Okay, in a down trade, which is a bearish order flow, price should the up close candle should be seen holding price. Okay, price is not expected to trade above the up close candles. Okay, so in other words, the down close candle in this case should be acting as support. Okay, should be providing support for price. So as you can see, this down close candle, we have price into it and reacted off immediately. Okay, you can see price trade back into it. So in other words, these are potential order blocks. Okay, these are potential order blocks. You can see price break structure to the upside, came back, traded into it right here, and expanded higher. Okay, so we are going to talk about that, the concept more, and we are going to talk about institutional sponsorship in the next episode. Okay, so please, if you have not subscribed to this channel, please do to subscribe to this channel, turn on the notification bell to get notified once we upload our weekly content. Okay, so let's back to business. So I saw this, okay, and this is my potential exit. So I was looking at this old high, which is this. So I was looking at the liquidity resting above this old high as a potential exit for my long position. Okay, remember I was already bullish. Okay, I am bullish right here, so I have a position that is currently running, and I took some partials. I had a position earlier right here, okay, that resulted at a break even, right? So I had one right here, okay, that resulted at a break even also. So but currently I'm having this position that's running in profit right now. So at this moment, I was looking for a potential entry to to tag along to the liquidity resting above here. Okay, so when I saw this on the 15-minute time frame, a break, and a potential OB, at the same time a fair value gap, so I went down to the lower time frame. Okay, so we had this. So this was where I got my, remember I got my the current running entry right now. I got it right here. Okay, so as you can see, price went up, broke structure, came back and grabbed liquidity and shifted in structure right here. Okay, shifted in structure, came up, traded back into this. So what is this actually? The last up close candle right here. As you can see, this is a breaker block, like we made mention earlier. Okay, so this breaker block, the last upclose candle before a run on liquidity, okay, which is before the run on the buy side, so the sell side liquidity resting below this old low and at the same time this old low. So this is a breaker block, price is going to react off that. Smart money are going to use that as a future reference to input more, to look for more, to place more buy, to place more long entries. Okay, so I have this breaker block, price bounced off it right here, so we add this. So this was where I got my last entry. Okay, so I got my last entry right there, for that's a ratio of 2 to 9. Okay, almost 3 to 1. Okay, so that was what I did and I was done for the day. Okay, so the takeaway of this uh lesson is that before now I just wanted to share with us a brief insight on how we used to, or how I used to trade. I How I used to trade with the smart money concept before 2022 mentorship. Okay, so the idea is just to look for higher time frame, look for higher time frame point of interest, right? So this was my high time frame point of interest, and prior to price reaching for that, my order flow will be bearish, right? So prior to price reaching for the higher time frame point of interest, this move, my buyers of course will be bearish on this move. Okay, so now I'm probably expecting price to reach for these old highs, okay, because this range we are having, at this range we are right now, price should reach for some opposing liquidity. Okay, so that is just that is just it for this video. Okay, I hope we have been able to learn one or two things from today's teachings. Okay, so if you have any question, kindly leave a comment, and remember our telegram group is always attached to the description box. Okay, so if you feel the need to join our community, it's free, you can join, and I do hope you have find this video insightful. Okay, so watch out for the next episode. It's going to be on institutional smart money, story, institutional sponsorship. Okay, so I've actually made out an episode on the application of, it's going to be more like the 2022 mentorship versus the smart money trading concept model. Okay, so what is going to be, is going to be like a 2-in-1 video. Okay, I'm going to show us where I applied the smart money trading model on a trade, and at the same time I'm going to show us the application of the 2022 mentorship concept. Okay, so they are going to be on the both are going to be on a single video. Okay, I'm going to do a video, an application of it on a single market, on a single pair. Okay, so that we can see how the boat looks like, and tell the difference apart. Remember, this is not to replace the 2022 mentorship. Okay, so 2022 mentorship is actually awesome. It's actually it's actually kind of, it's easy, and it's just, I'm just sharing this for the benefit of those that likes to take on the advanced side of smart money concepts. Okay, so I hope we have found this video insightful. Please, if this is your first time of coming across this channel, subscribe to this channel, turn on the notification bell to get notified once we upload our weekly content. Okay, so have a great weekend, guys, and see